to the day's big earnings, Yes Bank has released a strong set of third quarter numbers, beating street expectations on all key parameters. The bank's net interest income, for instance, as well as net profit are both above expectations. Asset quality has come in absolutely stable. Ritu Singh joins in now with the key highlights. Ritu, take us through the numbers.
Well, the key highlight, of course, as you mentioned, was that the net interest income as well as profits are well above 30%, much above what the street was expecting. Profits grew on the back of a good growth in advances, up by over 30%, and net interest income also grew with a strong CASA coming in, remember, because of demonetization, where a lot of low-cost deposits flew into the bank, helping it lower the cost of funds as well, on the back of which the advances growth also, by the way, was over 30%. This, of course, remember, is also due to base effect. If you look at a sequential rise, the advances grew by a mere 6.2%, so not a spectacular rise. There are areas of concern on the back of demonetization. CV2 segment, etc., have seen somewhat of a slowdown. The only credit growth really came from the other segments, which are MSME, agriculture, and renewable space, but more or less a muted quarter on the credit growth front. Margins have expanded by about 10 basis points in this quarter, and the management believes they will rise further as and when the CASA benefits come into the bank. Asset quality, as usual, was maintained by Yes Bank. No real worsening there in terms of gross NPAs on an absolute basis. Bad loans rose by about 9.7%, but the ratios were more or less stable, with gross NPAs at 0.85% and net NPAs flat at 0.29%, as has been the case over the past few quarters. So overall, a fairly decent set of numbers. No real setback on account of demonetization, surprisingly. And lastly, on the capital raising front, remember, the bank has an approval to raise $1 billion by way of a QIP, but no word from the management on when they're looking to do that just yet.